Welcome to TradeTheMBI.com. This is John. This report is for the 29th of March, and well, the juggernaut continues as we maintain this magenta over yellow, so no change in that. And you can see the complete follow through down underneath the zero here of the white MBI. So all in all, bullish from that particular standpoint, though not going to take much for a turnaround back up of white. But at that point, you're going to need to really see red deteriorate. So I would think that this continues in its current direction. You can see orange on a DOC coming back below, and a crossover to steel on there would be justification to expect a move at least all the way back up to the 100%. So shakeout still rising softly, and that's a much more controlled ascent. It's when you get those large moves where you get above 15 early on that sometimes fail pretty quick, but this is all pretty even. So, and again, this is all that counter trade to the expectation that everyone's, oh, the market has to go down. No, it doesn't have to go down. The realignment of, the viewpoint that the Fed will have to come in and save the day again still persists until otherwise proven. And at 0.25% move in interest rates was not really a serious attempt from a Fed at that particular point. It doesn't make treasuries all that attractive because you're not getting enough yield to cover the inflation. Therefore, you don't have any other choice but to be in the market. And the same thing with NASDAQ, doing the exact same situation. So unless you want negative yield, you really can't afford to spend too much time in treasuries. And that's why you're seeing the yield inversion on the 10s and 20s to the 2-year note, because short term, you're getting a better interest rate than you will in that medium to long term range. And well, that's never bode well 6 months or so down the line. It's always led to a recession. So we'll see if that holds true. Of course, a lot of things that had held true in the past don't, simply because of the amount of manipulation that the Fed has engaged in with its versions of quantitative easing as well as credit. So it's something we've been talking about since, 2011? Literally. It hasn't changed. So from a euro standpoint, again, still weakness. And still the euro is doing quite well because obviously U.S. Central Bank is going to keep flooding Eurozone with as much dollar reserves as it can to keep European banks from failing, because they're completely worthless given that they're all holding ECB bonds and the ECB itself is bankrupt. So yeah, go figure how that's going to work out well. But again, as long as people have faith and credit in U.S. reserves and U.S. currency as well as euro, it's going to persist. So from a gold standpoint, filling back in, we're at the positive extreme, so that's pulled that one all the way back through, and expressing some bearishness within those confines right now. So with the softness in gold, we would expect to see the same thing in oil, and sure enough, oil easing back some. Still, again, anything over this 100 level and over the length of time that it's existed is going to continue to persistently press the situation. It gets a little bit more fundamentally interesting when you start talking about the fertilizer issues, the propane issues that are needed for the Midwest going forward. Some of these constraints in that are going to affect crops down the road, and as we head towards late summer, fall, that's going to be the interesting one, to see the changes there and whether that creates shortages of food. We already know that that's going to exist in Europe simply because of the Ukraine situation and how much their exports go to North Africa and those areas, and whether that's going to create a new wave of migrant crisis, which would further deteriorate the Eurozone even further. So a lot of systemic problems. And where do you go for relief? Well, this is what we've been talking about. It's been building the case for cryptos because, again, this is treasuries, not going to go fast enough. I mean, we're at the 129. We were down at the lows 127. I was looking at more 125 to 120 range as things really start to pair up. The Fed already should have done at least 50 basis points. Literally a point would have been more appropriate to really do anything, but they're terrified of creating a negative return in the markets at the expense of getting inflationary pressures under control. So they're willing to sacrifice those that can least afford it at this particular stage for those that have the most, which is an interesting proposition, but that's exactly how it's playing out. And you can see it from a crypto standpoint, the explosion, because this is a recognition that, again, like I was talking about the other day, you're not safe. Well, even in crypto, you're not completely safe because of the public record on some of these things, but at least from an asset separation from these fiat currencies, because for a lot of people, it's going to be hard to predict who the winner and loser is. You can see a certain case of the euro just as being a disaster, but the dollar and whether or not some of these secondary deals that are taking place through India, China, Saudi Arabia, and others outside of the US dollar, and how that's going to, over time, have a significant impact on dollar reserves and how much dollar reserves are carried. And if they're not significant, that could be a problem for, treasuries going forward, as well as for demand and how much of the excess then gets put back into circulation, further exacerbating the inflationary scale. So it's just a lot of dynamics, and a lot of it can be very confusing. But safe haven, and also, of course, you're going to find there's going to be a lot of Russians and or others on the banned category list who are going to want to trade in some form of transactional efficacy, and Bitcoin can certainly do it because they can hold them on off exchanges in different names, and nobody's going to know. ETH, another perfect example, and a lot of the sister ones related to Ethereum in that. Likewise, you can see the giant move up from the earlier buy, and even in the weakness, a little bit past 50% on some of those, but after having elevated so high, still finishing up. And this is a huge move from where we were at the 24s before, so it's a significant play, same with Bitcoin. But easily seen, our indicators called it right on the schedule with that turnaround move. From 50K, we had a little bit of a dip, and sure enough, they brought it right back up to new highs, just to make things as difficult as possible. But there's that inverse right there when it flipped, clean and easy right off that setup right there. Just a little outside the ATR range for within that trade. And intraday, it was a lot of a mess. We had a nice even decline set up after this consolidation period. Once that based, we had the turnaround. Actually, the earliest buy took place right over here. We had that single green candle representing that, and literally should stay green within that confine. You have the one move of the white above, but still no dip of magenta below yellow. And then boom. What delayed it on this one is because of the softness of the green DOC not moving. Usually when we get this kind of steady build around the 23%, you get the green moving above cyan. It doesn't take place in this particular case, and that's because you have no steel reset, but every time it's popping above 13.5, it's the equivalent of it coming from underneath, which is a strong support thing. And then once you're inside negative 13.5 with the shakeout, and consistent with yellow above magenta as well, boom, keeps moving, and it just kept taking off. So it didn't matter where you started, plenty of options to continue to get into that as it was going. And you can see that white staying below, and this is kind of what we're seeing on the daily now, where the red and this white differential so far that even if you had a change from a daily standpoint with the drawdown of some kind, it would still take a while for that red, unless you had some kind of a catastrophic meltdown. So not particularly relevant to be concerned at this particular stage, given what we're seeing short-term, mid-term, all things are good. As always, though, I will continue to update details on the Skype chat and set up for indicators coming up for April. Trade well. We'll talk to you later.